Thank you, everyone, this afternoon. Thank you for joining us. And may I take this opportunity to acknowledge and thank the woman of God, Apostle Kanyati, who has given us yet another opportunity to be with you today. Let's open with a word of prayer. Heavenly Father, we thank you today for another opportunity to meet on this platform, Lord. We pray for wisdom as we discuss business and our exploits in the marketplace. We thank you, Lord, for each and every viewer today, and we pray for your hand of goodness upon them, Lord. I pray that they will succeed and be giants in the marketplace. This I pray in the name of Jesus. Amen. Thank you all. Thank you for joining us today. That was an instrumental from Zim Praise Band. I'll just cut it off as we proceed. Yes, for those who have been with us in the previous session, yes, you know who I am. My name is Reginald Mandi Teresa, and I'm grateful to be back. Then for those who have just joined us for the first time, well, I will give a brief background about me, about Reginald, to say who is Reginald. I am a general manager of an engineering company in Harare, having trained and worked for the top accounting firm in Zimbabwe, and also for various other manufacturing companies. I'm a holder of a master's degree in business administration, that's MBA, and also an associate member of the Institute of Chartered Secretaries and Administrators, among other business qualifications that I have. I have a passion for entrepreneurship, and I've been sharing my experiences and knowledge with entrepreneurs as a way to encourage them to start up their businesses and to grow them into successful businesses. For more insights into what I do, you can also subscribe to my YouTube channel, which is Fifth Row with Reggie. Yes, moving on to today's subject, we want to talk about money. Today we'll be talking about money matters. You will agree with me that many entrepreneurs find money management difficult, and there are a number of reasons why this is so. The first one being that most business owners, they do not have a financial background, and also the fact that many will be too focused in growing their businesses and also serving customers. So record keeping becomes a second priority. Yeah, so today we want to talk about how you can avoid common money management mistakes that entrepreneurs make, and also how you can improve your chances of success and profitability in your businesses. It is my belief after today's talk, no business should fail because of poor financial management. Yes, we are going to be looking at 12 common money mistakes that entrepreneurs make. That after this discussion, yes, people will not fall into the same trap. Without further ado, we'll move on to the mistake number one, which is underestimating startup cost. Yes, starting a business is something that is a process which is very exciting, but it is a process that do cost money. And when determining business startup costs, it is important to be very realistic. Things like office space, legal fees, payroll, and other organizational expenses, they do take up a lot of money. So most small business owners, they complain that they didn't secure enough money to start with. Yes, we know that entrepreneurs are generally too optimistic and often overestimate how business will quickly generate revenue. So the best approach for entrepreneurs to follow is what we call a rule of two. In this principle, basically what you need to do is that for everything that you are expecting, everything that you are planning, you need to double it. To say if you are planning, say, to get your revenue in a month or in 2 months, you should, on your plan, you should double that to say, okay, revenue will not come in the next 2 months, but it will come in month 4. Then the same applies as well for planned expenditure. To say you need to double all the costs that you would have planned for Because what we have seen is that you can plan to start your business with X dollars amount, but when you are now on the ground, there are other unforeseeable expenses that you might incur. And in most cases, you end up spending more than that which you would have you'd have planned for. And the same also applies to revenue. To say, as you start your business, you can plan and say, okay, with this kind of business, we'll be able to start receiving revenue maybe in the second or third month. But in most cases, once you are on the ground, that might not be true. And we always encourage entrepreneurs to make a provision for that. So ideally, we encourage startups that they should start with at least 6 months expenses cover as working capital. Working capital will be the money that you use in your day-to-day business operations. Then mistake number 2, which entrepreneurs make, is that of overspending on startup costs. So when you are starting, it's normal to be optimistic about how much business will do and how fast you start to bring in revenue. And you want to be sure that you will have everything in place that will meet customer needs, but unfortunately, this might not be so. So unless you have carefully researched your needs and budgeted for them, you can end up either ordering more inventory than you will be able to use within a reasonable period of time, or you can hire staff before you need to, or you can also buy equipment before the business can support it. So to avoid overspending on startup cost, you have to create a realistic startup budget for your business, and the budget should be based on facts. So what you need to do is just to determine how other businesses which are like yours have done it in the past, and you also need to see okay, to just determine how long did it take them to become profitable. That will help you again in your planning. Then how much inventory did they need and how fast did they turn it? So again, this is another issue to say, as you start, you need to hold sizable. By inventory, we're talking of the stocks of goods and products that you'll be selling. So you need to start with at least sizable amount of stock, because the danger is you can spend more money on inventory and you fail to turn it or to sell it within a reasonable period of time. So again, that will end up tying your money, and you end up without resources to continue running your business. Then again, you also determine an issue of when to hire employees and also where to advertise. Like we discussed in our last sessions, to say, yes, depending on the nature of the business, you also determine the channels that you use to advertise, and you also focus on those channels that gives you the best return. So the danger again is you can spend more money on advertising, but you will not be targeting the correct audience. Then mistake number 3 is confusing profit with cash. This is a major problem, especially with small business owners, small entrepreneurs. Here we'll be we're looking at a scenario whereby business owners confuse profit with cash. There's a general believing that all cash is profit, whereby, say you are selling something, you believe that everything that comes in is profit, then you make your expenditure on that without recognizing, to say, of the amount of money that you have received, how much of that is actually profit. I can give you an example of somebody maybe who's running a tuck shop and you are selling bread. On bread, you notice that the markup there might be less than 10%. So for every dollar that you have sold, it's only 5 cents, which is profit, which is your money. This again leads to over investment in certain areas while being unable to cover standard operating expenses. So by definition, cash is the amount of money that your business is readily available at any given time. This is actually due to the inflows and outflows of money from the business. Then profit is what remains after you have covered all the necessary expenses. Then just because a business is profitable, again, this does not mean that that business has sufficient cash flow to sustain itself or to cover its costs. So what you need to do is you need to manage your business. You must understand the difference between making money and managing money. So earning revenue does not always increase cash immediately. Then again, incurring an expense does not always decrease cash immediately. I can give another example. Say we've got a manufacturer. I'll call this maybe Chimsoro manufacturing, which manufactures maybe and distribute, say, executive chairs to retailers. So if Chimsoro manufactures a chair that is sold to retailers maybe for 200, for example, for $200. So Chimsoro can produce that chair, then sell it to a retailer for $200. And again, maybe there might be terms there to say, oh, okay, we're giving you the chair, but you pay it in say 30 days. So what happens here is that Chimsoro pays, in case expenses, maybe $170 in order to buy raw materials and manufacture the chair, then sell that chair to the retailer for $200. So what happens is that for Chimsoro, you recognize that I've sold the chair for $200, which costed me $170 to manufacture, which means there, if you do your simply mathematics, it means they've made a profit of $30. So when you look at this business, yes, they've made a profit of $30, but again, you now need to wait for 30 days for that 200 to come. So yes, the business is profitable, but in terms of cash flow, the business might not have money until that share is paid for. But again, for other, this might be different for other businesses like the retail outlets, whereby they sell for cash, which means they all collect cash there and there. So again, these are other issues that you need to look at. To say you look at your business model, to say you are going into the business as a manufacturer. Are you a manufacturer? Are you a distributor, or are you a retailer? So that again influences all the business terms that you'll be able to offer to your clients. Mistake number 4 is that of mixing business expenses with or business funds with personal funds. What we have seen, especially with the majority of us indigenous business people, is that there's no clean line that separates business funds and the personal funds. We tend to run our businesses mixing the two. So whether you're starting a new business or you're running an already established business, mixing personal and business funds, yeah, it is a recipe for disaster. So assuming you are a sole trader and that you are buying business supplies with your personal bank account or bank card, or you use your business check to pay for personal purchases, yeah, it would be very difficult now when you try to do your your record keeping, whereby you might fail to separate between business expenses and also the personal expenses. Again, this brings in another challenge when you get to a time where you need to compute maybe your tax returns. So once you fail to put in or to add in your expenses to the business, so it will mean you end up maybe paying more in terms of terms of taxes. So it is advisable, yeah, wherever possible, to separate the two issues, your business expenses and also your personal expenses. But in the event that you want to use your personal expenses, your personal money into the business, it's always better to document, to formalize this. Then you also do document it to say, okay, I have injected my X amount of dollars into the business. Then maybe later on, later stage, you can withdraw back that money. Then again, where you also have got business partners, yeah, yeah, it's always good to formalize this and also get them to sign and approve of such transactions. Then moving on to mistake number 5 is that of failing to create a budget or sticking to one. So a budget is a tool that lets you look at income and expenses for a set period of time. Again, here you'll be looking at how you can manage your finances and also your spending accordingly. So basically, you'll be looking at the revenue that you'll be able to generate within a certain period of time, and also the expenses that you expect to spend on within that period of time. So if you don't have a budget, and you don't pay attention to a budget that you have created, you may forget to provide for some future payments. Then you end up having a financial gap, which you might need to finance maybe through a loan or some other kinds of borrowings. Then again, when you reach that stage, it again becomes too expensive. Whereby if you borrow, then that brings in another element of interest payment, which will be a cost to your business. So what you need to do, there's an element that you need to create and monitor and manage a budget. It is very critical to have a budget. It's something that is key for your business to succeed. It should help you allocate resources where they are needed most, and so that your business remains profitable and successful. Again, when you're coming up with a budget, it's not something that is complicated. It should be a very simple exercise whereby you simply focus, say, the amount of revenue that you are likely to receive, be it in a month or in a year. Then from there again, you project your expenditure. Then you can plan your things accordingly and try to manage your resources in that efficient manner. So when you have made a budget, you should also be able to stick to it as far as possible. And this is also something that you should review and also revise as needed. Yes, we know changes will come whereby you need to make any alterations to whatever you would have budgeted for. Then the next mistake is mistake number 6, which is high fixed cost. Fixed costs, basically, those are expenses that do not change from month to month, regardless of the business volume or your production volume. These are sometimes referred to as overheads. So in other words, there are a set of expenses like your office rent, your staff salaries that the company must pay every single month, irrespective of whether they've generated business or not. So every fixed cost needs to be justified. So during the early days, it's always important to keep your fixed cost low. Then yes, startups need to figure out if, say, fence offices in an expensive location do make sense. So my advice to especially new entrepreneurs is to try by all means to minimize your fixed cost side as you start your business. Then you can always add other things as you go. Again, you'll be looking at things like your your office space, to say if you try to run your business maybe from home first, depending on the nature of business it is, or you can run it from a shared office space. That can save you a few dollars. Then again, also the process of hiring full-time employees. Yes, for a start, depending on the nature of business, there might be an element whereby you can try and run maybe with contractors that you can pay on an hourly basis for the amount of work that have been done, as opposed to hire full-time employees. But as the business grows, then demand will now influence the hiring of full-time employees. So it's always good for a start to start with a lean and efficient team. Then again, you also don't need to pay more than you have to for services and assets that your startups needs to keep up running. Then by following these simple tips and techniques, you will see that you'll be able to free up cash which you can spend on other things in order to grow your business. Then move on to step number 7. That's expanding too soon. Maybe this stage, what I will do, I will encourage viewers, wherever you are, to say if you have any question, you can simply post it in the comment section. Then even as we go through, I can try to attend to them. So mistake number 7 is expanding too soon. It is the desire of every business person to say once you've started your business, you'd want to see it grow and expand. But expanding your business before it has the key resources, again, might be a challenge. Like we discussed last time, to say before you think of expansion, you now need to lay a solid foundation and make sure that all systems are in place before you expand. So again, when you talk of key resources here, I'm looking at things like you need to have the cash, you need to have access to equity and also access to credit. Then you also need to have key structures in place. By key structures, I'm talking of things like your key staff, your management structure. And also the normal business systems and controls, these have to be in place. Because if you try to increase or to grow your business before these are in place, this can lead to a disaster. So again, you should not underestimate organic growth. There's what we call organic growth, where you can grow step by step, brick by brick. Yes, this might appear to be slow at first, but it gives you a solid growth. Then mistake number 8, it's waiting too long to seek credit. Again, this is a situation whereby as an entrepreneur, you can see that your business does not have enough financial resources. Then you do not need to wait too long in order to raise the red flag, or in order to raise the red flag, or in order to seek financing. Because what happens is this: you need, whenever you need to seek funding, you need to do this whilst your business is still profitable, whilst the business is still able to pay its debts, so that you can prove to whoever you are seeking the money from that the business has got capacity to pay back whatever you want to borrow. So the mistake that most entrepreneurs do is that they wait until the last minute when the business cannot finance itself. Then that's the time that people tend to seek financing. So at this stage, it might be a bit too late. And again, the financials of the business will not be in a very good position, and it will be very difficult for one to get the necessary funding. So then another issue, another element is that you don't get discouraged. Say if the bank turns you down, because we've seen employee entrepreneurs or business owners who really get frustrated when the bank says no, they can't lend you money. There are always other alternative funding options, some of which we have discussed before, and some which we will discuss in future. That you can explore and make sure that your business moves forward, it continues as a going concern. Then linked to the mistake of waiting too long to seek financing is also an element of using too much credit. Yes, banks are in business to lend money to other businesses. So there's this temptation that a business can be tempted to borrow more than what is necessary. Again, this creates problems, and yeah, one of those problems that when you borrow money from a bank, regardless whether the business performs or not, when the payment time comes, the bank will still needs its money. And we have seen this creating problems for some entrepreneurs. Then again, debt financing, it involves the highest amount of risk, where loans will need to be paid back even if the business fails. So entrepreneurs will need to be prudent with the debt. You really need to borrow when it is necessary and you've got something specific that you need to spend the money on. So really you need to manage your financial resources prudently. Then moving on to the mistake number 10, which is poor record keeping. Again, like from my introduction, where I said yes, no one finds accounting and business record keeping interesting, especially if you are not an accountant. I can tell you that, yeah, this is not something that is interesting, but nevertheless, the record keeping and keeping of financial records is something that is important for any business. Then again, if you lose your key records and you don't keep them, this might haunt you in future. When it comes, like I mentioned, when it comes to the payment of taxes or computation of taxes, you need all your records to be in place. So again, some might ask you to say, what kind of records do you really need to keep? Yeah, basically, I will look at three things. So the first one is the income statement, where you must keep the record of all your incomes, or for the income that you have generated. Then again, here you can simply create a spreadsheet or just keep receipts of all the sales that you have made during a period of time. And it is also important to keep the records of all the invoices you have sent out to your customers as proof of having done business with them. Then the second is receipts. You need to keep a copy of all your receipts so you can accurately claim on your annual tax returns. This includes all bills that are related to your properties or spending on equipment, on goods, or even lunches. When you take out a client for lunch, you need to keep all those receipts. Then you can claim them at the time when you do your annual tax computations. So by keeping a record of all your income and receipts, you know that once it comes to payment of taxes, you can easily just produce schedules, and all that information will be readily available. Then again, there's also statutory requirement depending on how you would have registered your business. Say you've registered as a private company, or it's a partnership, or even a sole trader. There is some legal requirements whereby they say you need to maintain your records for at least 6 years. But we always encourage to say, yeah, you can keep these as long as it takes. You might need them in future. Then mistake number 11. There's also an element of mispricing products and services. We know that determining the right price to charge for products and services is not an easy decision. I find this very difficult. Then again, if you charge too much, you could easily lose sales to your competitor. And also, if you charge too little, then you would fail to make a profit, and this might have disastrous consequences for your business. The new entrepreneurs often arrive at a price for their products and services by adding the cost, by taking the cost, then adding a markup they think they ought to make. For example, we can look at say a fencing company. they might look at maybe the cost of their fence. Then they add up the cost of labor, advertising, their office expenses, maybe a motor vehicle maintenance and repairs. Then they add all these these costs in to the fence in order to determine the cost of selling that fence. However, this approach can be said to be too simplistic, and it ignores factors like your market positioning and also the real value of your product. So before putting a price to your product, usually marketers, they always say, yes, before putting your price to your product or services, you need to decide on how you want to position your product in the market. So it's no longer an issue of you building your cost to say, okay, I have ordered this item at X dollars cents, I'm putting 20% markup, then you determine your price. So if you are really to succeed in business and to find your positioning, you need again to determine how you want to position your product. And how you do this, you need to ask yourself a few questions to say, okay, will you be a low cost and mass producer? Will you create a high priced premium or a niche product? Or offer a value product that combines reasonable good quality and relatively low price? So once you've determined where you want to place yourself, that will determine how you determine your product. So again, yeah, this is an element, yeah, that will need maybe another different topic to just look at the pricing model, how best you can come out with your price, and also how you can how you can how you can position yourself with the market. Because you have seen, even when you look at the kind of shops that we have in town, yes, we've got shops that tend to sell things at a premium. This is because they have made a choice of pricing them themselves that way. So you need to price your products and services at a point that again reflects its value. Then mistake number 12. It's not reinvesting early profits in the business. Again, this is a major mistake that we see with new entrepreneurs, whereby they fail to reinvest whatever they would have made in the business. So once the business gained momentum, so what we have seen is that once the business has gained momentum, most business owners, they would want to upgrade their personal lifestyles, whereby a person might maybe buy a bigger car, buy a bigger house, go for expensive holidays, and forget that they will need to reinvest the profits they have made into the business in order to secure its long-term success and make sure that the business grows. So once if you do this, then what it means is that you are simply stripping the business, and again, that business will not be able to scale. It will not be able to grow. So what you need to do, when you look at profits, these are like fuel that you need to keep on injecting into the business so that the business will not stop working. So you need to keep investing until the business achieves a certain level of stability. Then maybe at that point you can start to enjoy the fruits of your labor. So in conclusion, to avoid overspending, what I would encourage is for business owners to take care of those little expenses as they add up quickly. Then you move on to monitor bigger expenses. Like they always say in Shona, they say "Anzi teaspoon yakapedza sagari sugar." To say if you don't take care of the little expenses, at the end of the day, these add up to a very substantial amount. So you need to think carefully before you add new things to your payment list. And also always remember that being able to make a payment is not the same as being able to afford the purchase. So finally, you need to develop a culture of saving and sound financial planning. And again, whilst I'm still on this, it is not a weakness to seek advice from someone with a different perspective, or from someone who is knowledgeable in business transactions, such as maybe your accountant or a lawyer or a strategy expert. So you also need to surround yourself with the right people and advisors. Yeah, so these are the 12 mistakes that I have today. Which I would encourage and say to the business owners or to entrepreneurs or those who would want to go into business. These are mistakes that you should try to avoid at all cost. And again, I just want to give my special thanks to Apostle Flo Kanyati. It is my prayer that we will be able to implement these tips in our business, in our ventures, and that once we've done this, our business will be able to grow and thrive, even in this environment. People, until we meet again, God bless you and thank you for tuning in today.